Welcome everyone to Vested Interest. This is Shane, and we are going to do another stock suggested by picked out of the comment section. With that said, we are going to jump right into the video and get right to it. But we are going to look at Medical Properties Trust, and that suggestion was brought to you by Kathy Webb. This is from a comment on a stock pick of the day video I did, I think last week, Stag Industrial. So go check that out if you have not done that already. And Kathy Webb says, "What do you think of MPW?" Well, Kathy, let's take a look at it, and I'll give you my opinion. So Medical Properties Trust, ticker MPW. This is a REIT out of the REITs and real estate sector. September 16th, they closed out the day at $13.80, which would be a 0.8% increase for that day. 52-week range as low as $13.30, as high as $24.13. Definitely closer to that 52-week low currently. They have a market cap of $8.266 billion, a better less volatile than the overall market at 0.82. PE ratio, really you want to look from funds from operations for REITs, but a low PE if this was as applicable as funds from operations of 6.90. Earnings per share $2. Earnings date is going to be October 26th through October 31st. Forward dividend is $1.16 paid out annually. I believe this is a quarterly payer. They have a dividend yield of 8.41, so that's a very nice dividend yield. Ex-dividend date was this past week, September 14th. So to get the dividend, you would have had to buy it the day before the ex-dividend date. And according to Yahoo Finance, where I'm pulling this information, they have a one-year target estimate price of $18.43. So let's jump in and take a look at their financials next. So if I clicked over on financials, I want to look down at income statement. And what I want to see here is I want to see growing revenue, right? So in 2018, they had $784 million in revenue, 2019, $854 million, 2020, $1.2 billion, and 2021, $1.5 billion here. All right, profits growing as well, 775, 830, 1.2 billion, 1.5, 1.5. Now, when I look down here, 2018 shares, basic average shares, 365,427, or 365 million, 427 million, 529 million, so it is growing over time from 2018 and 365 million to 2021, 588 million. So that's a little bit of stock dilution. We don't like to see that. We prefer to see companies buying back shares. That way we own more of the company as they dilute you. Unless you buy more shares. If let's say I bought 100 shares in 2020 and I didn't buy any more. Well, when they issue more shares up to 588,000, it means I own less of the company, even though I realistically didn't do anything. They just issued more shares, right? Next up, we are going still in financials, looking at the balance sheet. We want to see total assets increasing 8.8 billion to 14 billion, 16.8 billion. So definitely increasing over time. Current assets over current liabilities. You want current assets to be higher than current liabilities, which it is 2.7 to 2.3 is every year actually. All right, so that's good. And again, basic average shares, they are diluting you. They're adding shares every year, which I don't like. But again, that may be why they're cheap, right? They're $13.80. That might have something to do with them adding shares all the time. Now we are still in financials. We're going to look at cash flow. We want to see growing free cash flow. That's what the dividends are paid out of. So we want to make sure that the dividends can be covered by the growing free cash flow. So 449 million in 2018, 494 in 2019, 617 million in 2020, and 811 million in 2021. Currently 790 million. So growing year over year, that's good. And definitely, yes, you can see where the stock they issued every year, issuance of stocks of capital stock, right? They issued 94 million in 2018, 2.5 million. So we don't want to see that. They are repaying debt, which is good. Issuance of debt looks like they've got some debt on the books. I mean, every company pretty much has debts on the books. Not a huge deal. They definitely want to see growing free cash flow, and we do. So that is a positive. Now we'll jump over to statistics. Some of the statistics I like to look at: PEG ratio, anything around 1. This says not applicable, so may have been negative. Price to book, I like around a 1 as well. That looks good. 1.3 in 2020, real nice. 1.5 in 2019, 1.6 in 2000. Yeah, so I mean, the price to book looks nice. Return on assets, we want to see a high return on assets and equity. 14% return on equity is nice. 3.5% return on assets is a little low. but it's in the positive, so that's a good. I mean, I really want to see, maybe a 8, 10, 12% there. It'd be nice to see 16, 20% return on equity, but 14% is not bad. Forward. Now, I also like to look at the 5-year average dividend yield over here. Their 5-year average yield is 5.9%. The forward dividend yield going forward, and currently we saw on the screen above, was 8.4%, so definitely higher than the 5-year average. So with it being higher, that speaks to undervaluation for this stock currently. If it was lower than the 5-year average, that would mean it would be overpriced. Payout ratio is another one we want to look at, and that is at 57%. So that's actually pretty low for a REIT. And their dividend date announcement was October 13th, and as we saw on the previous slide, September 14th was the ex-dividend date. So some of this is duplicate information where you can find it in different places. But again, I get into the financials, I look at the statistics. These are the things I'm looking for: return on equity, dividend yield higher than the 5-year average, right, and a low payout ratio. So these are all positives. Just check mark, check mark, check mark. Very nice. Now we'll jump over to stockanalysis.com as another site I like to look at. We're going to look at their dividend history a little bit, right? We saw that 8.3. It actually said 8.4 yield on the other slide, so maybe this is on September 16th, so same day. Oh, it was not. Maybe that's the difference. 0.88%. The time that I took this may have been the difference. Anyway, $1.15 annual dividend, ex-dividend date. We saw this. Now here, the same, around 56, 57%. Payout ratio, it does pay out quarterly. Here's the payout frequency, right? Dividend yield, 8.3%. Very nice dividend yield. And then this is a nice one that I'd like to look at as well. Dividend growth. We want to see it growing year over year. We'll see that on the next slide as well. But it's growing. It's just not growing real fast. So 3.6%, it's a high dividend yield. So that, I mean, I could live with that blend, right? If it was a lower dividend yield, we might want to see a 8, 9, 10%, 12% dividend growth year over year, but at 8.3 and still growing at 3.6%, again, very nice. Another check mark in my book, and the payout ratio, again, is pretty low for a REIT. Next, again, we saw that it is growing year over year, going back to 2016. Dividend history, you can see it was 23 cents, then 24 cents, then 25. Looks like it may have stagnated there in 18-19, but then grew in 2020, 27 cents, 28 cents, and now it's 29 cents. So definitely growing year over year. And then this is the other one we look at in the stock pick of the day. According to the 19 stock analysts from stockanalysis.com, they call it a consensus buy. They have a low estimate of $15.15, which it currently sits below that low estimate. So if it reaches their low estimate, which would be higher than where it's at currently, that would be a 9.78% increase in stock price. If it hits their average of $18.94, that would be a 37.25% increase, and if it happened to hit their high, that would be a $24.15 per share and a 75% increase in stock price. All the while, you would be collecting that 8 plus 8.4, 8.36, whichever it is, whenever you buy it, dividend. We'll just say 8% yield plus dividend. So, in my opinion, if you're looking for a REIT to add, Medical Properties Trust is definitely one you could add. Another place I would go, obviously, is look at their homepage. See what kind of properties they're in. Medical Properties Trust, we didn't do that on this one, but that would be another one I would do. I just didn't want this to become a 20, 30-minute review, trying to keep them under 15 minutes or so, 12 minutes or so. So Medical Properties Trust, yeah, it looks like a nice one. I really appreciate the suggestion. This is one I might have to add to the watch list. I'm not looking to add any REITs currently. Actually, Store Capital, I've got to do a video on that one because it is being bought out. So I am going to lose a REIT, and this one does have a very nice dividend yield. So I'm going to add it to the watch list. Maybe I'll do some more research. I'll look at their homepage and see where their properties are located and what exactly they're in. Are they in elderly care, or or do they own quick walk-in centers? Do they own actual hospitals? That's kind of what I would look at there. And I think this is a slide I was going to stop at to give my opinion, so I'll skip over that. And hey, as always, I really appreciate the suggestions for new stocks to take a look at. So if you have any, go ahead and drop them down in the comment section below. And if you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, subscribe to the channel. Drop a comment down below. Like I said, let me know what you think of the video. Let me know what you think of MPW. Let me know what your favorite REIT is. I do personally read and respond to the comments. I'm always interested to read your questions, suggestions for future topics, opinions. You constructive criticism as well. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. I'm not a financial advisor. Nothing in this presentation should be considered for financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount not comfortable losing. Always do your own research best based on your situation and circumstances. Select criteria or seek the advice counsel of a certified financial advisor.